Would you like an alternative way of recording billable expenses so that you don't have to track them to income accounts? Well, then you can record billable expenses by decreasing the billable expenses when you place them on an invoice for clients. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. There are two ways that billing a client for job-related expenses could affect our account balances at the moment that we bill the client. We could place them on an invoice that reduces the original expense, or we could place them on an invoice and have them be recorded as an increase to income instead. Now, this video is about the first choice, decreasing billable expenses. But you get to choose which way your QuickBooks Online records these billable expenses. So, the way to choose is to click the cogwheel to open the account settings window. Then you would click account settings and you would click this gray expense area here, and then you'd be able to open up the area with the pencil tool. Once you do that, that portion of the account settings window will look like this. Now notice, by default, the check mark is already marked. That's the way it was by default. But what would happen if we removed the check mark? Well, if we removed the check mark, and then of course, we click on it to remove it, we would click Save, then we would click Done, then this would be the behavior. When we pay, the behavior would be the same. The cash and bank would go down, and the related expense that we paid for would go up, exactly the way it did in all prior videos. However, now that we check the box, when we bill, of course accounts receivable goes up because we just sent an invoice to a client. But this time, because the check mark is removed, the related expense would go down. And that's going to be the difference in behavior when we record this next example. When we do this, no income accounts change at the moment we bill. Instead, the expense will go down. Now, before we go ahead and remove the check mark in the account settings window, let's address one little technical point that I found out about the hard way. You see, if you already mapped any expense to income accounts like we did before, then unfortunately you must unmap them before we click the check mark in order to get this feature to work properly. So bear with us. We click Accounting, Chart of Accounts. Let's go down to Delivery Expense, Edit, and let's unmap by removing this check mark. Save and close. Same thing with Professional Service Expense. Edit and remove the check mark and unmap the accounts before we change the account settings. Otherwise, it might not work properly. And again, I found that from experience. So now we can click the cogwheel and go to Account Settings, choose the choose the expense area, click the pencil tool. Now we will remove this check mark, click Save, and in the bottom right down here that you can't see, click the green Done button. Now the defaults are changed. Now we can do our example. Let's imagine on July 31, we paid $700 to UPS for a delivery related to Betty Boop, and we will bill her later. So we know how to record that, so let's just go ahead and record that. We click New, Expense. We go back to July 31 of 2021 in our little story. And we are billing, who are we billing? We're billing UPS for delivery, or we're getting a bill from UPS. And then it's for delivery expense. And it's delivery expense in the amount of $700 that relates to Betty. And it's billable to Betty. So all we have to do is click Save and Close, and exactly what we expected to happen would happen. If we look in the trial balance, you can see here's delivery expense. You double click, and you can see this is the July 31 delivery expense, increasing it by $700 and having it become $1,400. Okay, now reports. Let's look at the profit and loss by client in this case. And when we look at Betty, what we see is the delivery expense, and we do not see for Betty any income from delivery expense. We double click and you'll see only the delivery expenses that were tracked to Betty. Okay, now we can do the second half. We go to the second part of the example and imagine that it's August 1, that we're billing Betty for $4,000 in legal fees, and we're billing for the July 31st delivery. So what will happen when we bill? Well, when we send an invoice to a client, accounts receivable goes up, but the expense that we paid for will go down at the moment that we bill the client. Because now that we billed the client is now responsible, and our company, no longer has that expense. So what will be the results in the trial balance at the moment we record this? Well, income from bill delivery will not change at all because we're not bringing it into an income account. And delivery expense will decrease and become $700, because $700 that was there will now be added to, will now be removed because the client is now responsible. And because we billed for $4,000 more in legal services, this goes up to $39,000, and the total is owed. And that's why the receivables account unearned legal fees is on the debit side. So if it's on the debit side, it should really be called legal fees receivable, but this will be the final number. So we click New, Invoice, and we choose the client, Betty Boop. We have a billable expense that we click Add, and of course the date is August 1. And we go under the billable expense in the next row and bill for legal services rendered $4,000. Okay, now when we click Save and Close, we can open the trial balance and see the numbers are exactly as what we expected. Income from bill delivery did not change at all, but delivery expense decreased. Watch, we double click. And look, that was the increase when we recorded it and the decrease when we billed. Go back to the trial balance to confirm that all the other numbers are exactly as what we expected. And now finally, we look at the P&L by client. Reports. Now, what should we expect on the profit and loss by client? We should not see income from billed delivery up here, and we would not see the full $1,000 down there. We should see only the $300. So when we click profit and loss by client and we look in the column of Betty, this is only $300 because it decreased from $1,000 when we billed it, and there's no income from delivery in the Betty section.